Hello, and welcome back to the Argyle Financial Controller Leadership Forum. My name is Brittany Sullivan with Argyle, and it's great to have everyone joining us today. A couple of notes before I turn things over to our esteemed speaker. First, a quick reminder to stop by our sponsors' virtual booths at any time during today's event and for the following week. Our partners are committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit their virtual booths from the main agenda page, which includes complimentary materials, information, and meet and greet opportunities. To ask questions throughout the session, simply type into the Q&A chat and we will address your questions at the end of the session. Now, without further delay, I would like to introduce our speaker, David Palmer, Blockchain Lead at Vodafone. We are excited to have David with us for a keynote titled Harnessing the Potential of Blockchain. Welcome, David, and over to you.
Hi, everyone. Thank you, Brittany. It's a pleasure to be presenting on blockchain. I've been involved in blockchain and industry for many years now, and indeed we do have a live use case in terms of the digital asset broker platform at Vodafone, which it is a live example of blockchain being used in industry. So I just wanted to maybe just run through a look at where we are and what's been happening in the wider sort of population and the wider landscape. So in terms of population, we're expecting that by 2030, there'll be 8.5 billion people in the world. And by 2024, 8.1. So we're seeing that the population's growing. Maybe a testimony to the telecoms and mobile phone companies. We're expecting that in terms of mobile phones, we'll have 8 billion mobile phones by 2030, 30 billion IoT devices. Very interesting that we'll have fixed 5.6 billion digital wallets. So that's 65% population penetration of digital wallets. So this is your Apple Pay, your Google Pay. And in terms of blockchain, the numbers are not so high. So we're expecting that that by 2024 there'll be something over 320 million blockchain users. And I put a question mark for 2030 because actually, if you look at the population and you look at mobile phones and IoT and wallets, it's very clear that for blockchain to really take off, it somehow needs to be accessible to the population. It needs to be accessible via mobile phone. It needs to incorporate IoT devices and work with digital wallets. In terms of the metaverse, I think it's very similar to blockchain. One of the things that we look at the headlines this year is AI, and the AI market is growing. But I think if you look at it, could the integration of IoT digital wallets be key to blockchain? I think that's what I want to explore. If you look at Web3 and AI, the question is, can blockchain, Web3, AI, and the metaverse still change the world? I think blockchain plays a part in that world transformation that's happening in terms of providing a new infrastructure for trust and automation. I think we're seeing blockchain being used more and more in industry, in banking, in trade finance. We're seeing a lot more blockchain use. We're seeing that blockchain is also leading in terms of innovation. So we're seeing that with DeFi, decentralized finance, this is finance that's happening completely by smart contracts, and finance that is happening by community governance. So we're seeing that blockchain is providing the trust and the automation capabilities for that. We're seeing that with organization, DAOs, decentralized autonomous organizations, are run by smart contracts and communities. Smart contracts in the UK are actually law. In the US, this is something that we're moving towards. Generative AI is adding new intelligence and new tooling. Tokenization of real-world assets is adding a new way to port assets. 5G is connecting the world, or providing the connectivity infrastructure with fast fiber, so that we can have connectivity across this. And the metaverse is really providing a new interaction point, a new web browser for users. So something I say, is that Steve Jobs, basically in this quote, is saying that change is happening, and we can be a part of it. And if we look at the key considerations for blockchain, part of it is, okay, should the blockchain be public or private? Should it be public and private hybrid? And what consensus protocol, proof of work, proof of stake? How do we in industry handle transaction fees? Should private blockchains don't have a transaction fee built in with it, whereas they do with public blockchains. But actually, if you're running a business and enterprise, we need to fix our costs, right? So if you've got a variable transaction fee for every transaction on the chain, that's very hard to cater in from a business point of view, and there's a barrier. Do enterprises use and businesses use blockchain at layer one or layer two? Layer one being infrastructure and protocol for infrastructure, and layer two being on top of that. How do we comply with privacy? In Europe, we have GDPR, which is about private data, and we're having similar challenges with privacy across the world. Of course, blockchains, it is possible to see who's at the other end of transactions, and there is data that can't be deleted. So you have an issue with things like right to be forgotten, which is part of privacy legislations in some regions. One of the other challenges you have is blockchain and existing systems. So a lot of organizations, companies, industries have spent a lot of money on ERP systems, and they forward spent many years. Blockchains, in some approaches are looking to replace those systems. Actually, integration is the key. How do you integrate blockchain with existing systems? Blockchain as a service. So, is blockchain going to be, trust as a service where you have an API to use the blockchain, or do you have to use the whole platform? How do we incorporate, digital wallets with blockchain? There are things like account abstraction which do this, but it's something we need to look at. Digital identity. So blockchain-based self-sovereign digital identity is a consideration we need to look at. And how do you approach this, right? Do you approach it from a Web3 blockchain point of view, or do you approach it from a sort of mainstay point of view? How do you incorporate smart contracts beyond blockchain? And there's a number of other things, the regulatory position, etc., that needs to be looked at. So in terms of what's been happening in blockchain, very interesting that in 2021 we had the peak of crypto prices, right? So you had a 1.7 trillion market size for cryptocurrencies, 240 billion locked in DeFi protocols, 22 billion traded in NFTs, 30 billion invested in startups. You had an ETF for Bitcoin, which single day trading was over 1 billion. Over 200 million global users, and an NFT sold for 91.8 million. Right, and then we had 2022, where the market dropped 70% for Bitcoin and other leading currencies. Metaverse tokens dropped as well. DeFi dropped over 100, well, over 50%. The daily trading on NFT exchanges went down 99%, but there was some positivity in the Ethereum merges, the number of countries adopting central bank digital currencies, etc. So there was there was some rebound, and now where we are in 2023, we're seeing an even bigger rebound. In terms of, how blockchain and business can go together, part of what we've done is to look at the SIM card, and to look at how the SIM card could connect to blockchain. So if we, on the previous diagram, I showed 8 billion smartphones plus by 2030 and 30 billion IoT devices. Actually, we see the SIM as key to integrating that smartphone ecosystem and the IoT ecosystem to blockchain. And we've actually developed that bridge. We're starting to use it. I think that's pretty key. And what you're having there then is a new infrastructure which involves telco, and which involves blockchain infrastructure, right, and IoT infrastructure. And we believe that this will be key to supporting AI and the metaverse going forwards. We also believe that mobile, and the billions of IoT devices and the billions of smartphone could actually be more closely integrated into the blockchain infrastructure. and could be part of the consensus protocol. And in fact, Valtteri Buterin, who's the founder and inventor of Ethereum, has actually said that by 2032 he's seeing that nodes, validated nodes, will be running on phones, and this could be a key convergence in terms of blockchain infrastructure. More importantly, getting it up to enterprise grade, making it more resilient, making it more distributed, and making it more effective. Some of the things we're looking at in terms of blockchain and phones is to provide trust between IoT devices, so that essentially not only can IoT devices autonomously, so this is autonomous car with an autonomous charging point or autonomous car with an autonomous toll, but not only can they trust each other, but actually using smart contracts and peer-to-peer payments, they could actually start transacting with each other. And we believe that this is part of the new digital infrastructure for a new digital economy. Some of the use cases here are automatic payments of cars with parking meters, cars and charging stations, all using blockchain infrastructure. So electricity infrastructure and portable grids, or solar infrastructure, and the grid. And we also believe, I also believe that NFTs, are going to be important in the new digital world. A lot of estimates that the metaverse could be worth as much as 5 trillion US dollars by 2030. That's the opportunity size. And what we're seeing is that, to have digital ownership of rights, assets in that new digital world, NFTs, could be a good vehicle for ownership. And we're seeing that there's different smart contracts based on blockchain that are used here. So if we use the Ethereum language, it's ERC 721 4907 and ERC 20 to fractionalize that. This focus that the market for NFTs could be worth 80 billion by 2025. But I think more importantly, where you have digital ownership and portability and transactions, that this fits nicely with the metaverse and AI. In terms of how these things come together, blockchain is supporting the economy of tokens. We've shown that blockchain is supporting the economy of things. We also believe that blockchain will provide the trust infrastructure and the transaction infrastructure for the metaverse economy. And we believe that these, will be very sizable going forwards, with 1 trillion for the metaverse, but also 6.7 trillion for the crypto market, 80 billion for the NFT market, and 1.1 trillion for the IoT market. And we believe that blockchain will be part of the infrastructure for all of these. In terms of blockchain and the metaverse, we believe that blockchain is providing interoperability, it's providing portability of assets, peer-to-peer transactions, programmable transactions, security, consensus, timestamp references, distribution, and immutability. And we believe that this will be key infrastructure for the metaverse as well. But I think more importantly, blockchain can also be seen as part of the infrastructure that will be supporting this. And if you look at it, there's various smart contracts now that are coming up for finance, investments, renting, creator remuneration, which are coming up, which could hold the answer to some of the economic problems that we have to incentivize the creator economy. And I think this could be a key role of blockchain to provide that root of trust going forwards. And in terms of this, there are some issues that we need to look at. So one of them is around quantum. So some of the cryptography which is used in blockchains are actually cryptography are actually in danger of quantum. So one of them is RSA, which could be broken by quantum. The next one is Diffie-Hellman key exchange, which can be broken by quantum. The other one is elliptic curve, which is very widely used even by ourselves, which can be broken by quantum. Some of the cryptography which are quantum proof and are being built into some of the blockchains are lattice-based, code-based, and multivariate. And this will be important going forwards, as its clear message is that with quantum, blockchain cryptography and cryptocurrencies, which are secured by cryptography, need to evolve. So I'll end on this slide here, which is saying, okay, how can existing businesses position to use blockchain? What can be started now? How can I tell if my business can be a metaverse business, right? And how can that be linked with blockchain capability? Do you need the blockchain capability to get into the metaverse? Um, how can we get the keys, right, to actually, the key things to actually move into becoming a blockchain-based business, and how can it help you? And what are the timelines? We believe that, well, I believe that, blockchain is now going through a period of consolidation. Um, that consolidation will lead to infrastructure at layer one. That blockchain is moving from permission to public blockchains, and that at the end of this transition from permission to public blockchains, that we will have new digital infrastructure. That digital infrastructure will work with AI infrastructure. It will support metaverse infrastructure. It will interoperate with telco infrastructure. But the new generation of applications for consumer and businesses will use all of these capabilities. This is the power of blockchain, which needs to be harnessed. And I believe that the key to harnessing that will be new operating systems and new applications. Thank you.
Excellent. Thank you so much, David, for such a great keynote presentation. As a reminder, audience members can still enter questions, and we'll go ahead and review a few that came through. This first question asks, since AI is such a hot topic right now, what role does it play within blockchain?
Um, so AI will help to build blockchain going forwards. So there's a lot of talk about AI generating code, AI bots. I believe that AI will be used as a tool to help build blockchain and test the resilience. Um, but I think more importantly, as we move to the world of AI, we move to a world of uncertainty, where there's a lot of threats from deep fake schemes, and you need to have an identity you can trust. You need to have data you can trust. And I think blockchain will be the trust to police AI, right? And to give it, and to give users confidence, in the source of AI and the source of data produced by it. So I think the blockchain infrastructure becomes more important, because we need to tell, which data is synthetically produced by AI that is going into AI algorithms. And I think smart contracts could be used to police AI as well.
Excellent. Thank you. This next question, will blockchain grow in importance in the new year, or what do you think it will look like for 2024?
I think 2024 is a time when blockchain will start to consolidate in industry. I think what we're seeing is a lot of banks, a lot of big institutions adopt the technology. So I think maybe you'll stop hearing so much about blockchain as we move forwards, and we'll move more towards the solutions it's supporting. So I think look out for big announcements of products by banks and businesses which are using blockchain. But blockchain won't be the headline. It will be a supporting enabler.
Great. Thank you. It looks like we have a couple more questions. Do you think organizations truly understand the benefits or potential of blockchain?
I think they do. I think it's been a long cycle, maybe sort of 5 years. The organizations have been experimenting with the technology, where the technology's uh, been maturing. I think the key thing now is that we now have integration. We have the ability to have trust as a service, where technology can be integrated with other enterprise and business technologies. And I think we're starting to see that with some of the leading banks and big organizations starting to go live with solutions which have blockchain capabilities incorporated.
Excellent. And how can organizations properly budget for blockchain capabilities?
That's a good one. So I mentioned the public blockchains and the gas fees or transaction fees which are charged, which can be vary based on the price of the cryptocurrency. That one is a difficult one. But what you're seeing again is banks and something called account abstraction, where you can actually abstract away the gas fees or the transaction fees. That I think account abstraction is a very important development. So you're seeing that Visa have come up with a PLC which abstracts away the transaction fee, which can be replaced by a fixed cost. And I think that is a very important development and will help with budgeting going forwards.
Great, thank you. And we have one last question to close us out.
Sure.
Is there ever any reluctance to change or reluctance to embrace new technologies from employees?
I think always, especially AI, will be the one that is seen as a threat, but it could also be seen as as an enabler. And I think we're going to see a lot play out in terms of whether it is a help or a harm, and to what extent we should allow it to take over the workplace. It's not always good, right? I think we've seen in the past situations where we've replaced people with technology or things they've done, and we've gone back and put it back. So I think there's a balance to be had. But I think it's always good to be knowledgeable about the technologies and how it can increase productivity. But at the same time, we should also be listening to employees about, you know, concerns as well.
Excellent. Well, thank you so much again, David, for
Thank you.
such an insightful keynote. I also want to thank everyone who joined us today. This session, along with all of today's content, will be made available on demand. Thank you again, David.
Thank you very much. Thank you. Bye bye.